All right, people, we're going over something that's a little controversial, I would say, in the trading space. Okay, risk management, especially in the ICT community. This has been a real. I've been seeing some crazy things recently. Like, bro, the risk management in this community that I've been seeing recently has been horrible, like horrid. Okay, so we're going to be teaching risk management today. You ready to learn? Yeah, we're going to be teaching risk management. Yay! Risk management. Yay! Anyway, we're not doing risk elimination here. You know those stupid gurus or stupid 6-month new gen retard LARP ICT traders that set their stop loss to break even after 20 points of profit? Yeah, I'm not teaching that. And hold on, I got a cough because for some reason I got mucus in my throat. Okay, okay, I think I'm good. My bad. I might cut that out, but I might not. But those people, don't listen to them. Okay, it's like that one GIF where it says "Don't listen to him." I think I might just make that image fade on screen because it's funny. I like that GIF. Anyway, do not. And when I say do not, I'm just going to keep this real short and sweet, in which I might go on a little yap session, but it's going to be important. Do not use stop losses. I don't know where this break even propaganda has been coming from. I don't know where it came from, but it was just a random, like I'll say 2025 to this year, where I'm recording this video and where I posted it. There's been a whole lump sum of people setting break evens. You know what's funny? I've never seen my own mentor do that. I've never seen ICT once set a break even. Never. The only two things I've seen him use is a take profit, a stop loss, and a trailing stop. I have never seen him do break evens. Never seen him do it. Okay. And even if he does, the only time I've seen him do break evens is if what? He's up a crazy amount. Like if he's up 100 points or like 70 points. Not even, maybe like 100, 120. That's the only time I've seen him do break evens. But what I'm going to teach you here, right? Because I have some good ways of managing and not eliminating your risk. Okay. I'm going to be teaching you how to manage your risk. We're going to be going over hedging. We're going to be going over close proximity stop losses. And we're going to be going over trailing stops. Okay. Okay. But basically, what I want you to understand before we begin is I will not be going over break evens. Break evens are stupid. You can click off this video if you think I'm wrong. Okay, in which I am, of course, going to prove it to you why they're retarded. I'm going to prove it to you in replay mode and all that. I'm going to prove it to you. But do not use break evens. Okay, we're not going to be talking about those. Break evens are stupid. They don't teach you anything if they get hit. Because, for example, with the stop loss, if you set it at a calculated and precise point based off of the concepts and knowledge that you know, you can say, oh, okay, if my stop loss get hit or got hit and I set it at a specific area to where it possibly should not have gotten hit, then there was a reason it got hit. You know what I'm saying? You should have learned a lesson from that stop loss. But with a break even, what are you going to learn from a break even when it hits break even? What are you gonna learn? Oh, I'm just gonna set my break evens later so I don't get lose any money. Really? No, that's I'm not teaching that. No, that's just stupid. I'm thinking about that stupid Instagram ICT new gen trader LARPs that are into 6 months of ICT and they just know about inversions, liquidity sweeps, and just some other BS. Don't just don't. Okay, just don't. Okay, I'm obviously going to be teaching you something different every time I make a video. Okay, there's not a single channel on this platform that can teach you as much as I can teach you. You want to see? No one can teach you all this. I'm not being egotistical, but I'm just trying to understand who you're learning from and where this knowledge comes from. Okay, I put a lot of work into these videos so you can actually learn something. Obviously, a lot of people don't know about me, but the ones that do know about me, I'm sure they're learning, a good amount of stuff. Anyway, enough yapping, okay? But short and sweet, to keep it real short and sweet, I will not be teaching break evens. I want you to get that stupid concept out of your head. Okay, for the ones that do use break evens, do not use them. Don't. Don't. You don't learn anything from them. They don't give you any insight, and it's just stupid. Okay? Because if it hits break even and it runs on you and it keeps running on you and you keep using break evens, what's going to happen is every funded account that you have, you're going to start spamming break evens after 10 points of profit. Then it's going to keep knocking you out your trade at break even. Then it's going to run without you 200 points. And then it's going to be an infinite loop of just 200 evals and spending 20K on funded accounts. Okay? We're not doing that. Now, let's go straight to replay mode. Okay? We're going to use. Today is FOMC, June 17th, Wednesday, of course. So we're gonna use yesterday's price action, Tuesday, yeah. And we're gonna start it at I think I actually tried to record this yesterday, but my parents walked in the house and interrupted my recording. So let's go to yesterday's price action and see when exactly did it start expanding lower here. Let's see when exactly it started expanding lower. So right around 9:57. Oh, I actually already. Oh yeah, I already had it set there. Wait. Yeah, 9:57. Okay. We're gonna put it on 150K, and we're gonna put it on full screen. And here we go. Hedging stop losses. Well, close proximity stop losses using the 15-second, and then drilling stops. Simple, right? Real simple. All right, now just go ahead and look in here so it won't seem like I'm just using hindsight to predict the direction because there was obviously confluences here, guys. I'm not retarded. We had, oh wow, why does the micro look like that? Wasn't there a liquidity purge here? Didn't it reach up there? I swear it did. What this is the actual contract though. That's a little weird. Wait, let me go to the wow, is that real? Because look on trading view. Wait, hold on. Let me show you guys this. Wait. Yeah, look on trading view. Look at this. If you look, it actually knocked out that high. Um, I don't really know what to pay attention to, but I guess we pay attention to Tradeovate because it's, real data, real tick for tick data. Anyway, we have the daily retracing up into this order block, and then I think, well, no, would we even consider this an order block? Yeah, we would. This entire order block here, we're inside of that, and then if we go to where's my custom time frame? The 4 hour, we can see that we purge this high right here while coming back into really no arrays, honestly. So we just had a failure to break that all-time high up there. You can see it behind this little template list thing. We failed to break all-time highs. We had a liquidity purge. We had a close below it, failing to go higher. And if we go back to the hourly, over here, we have another, little short-term swing liquidity purge here. Displacement through it. Then we had lack of displacement while going past it. That's showing willingness to go down. We drop lower, break your market structure, order block, retraces up into it, respects it. You get the point. Yeah, it's a whole bunch of confluences that say price is going to go down. And then if you even want to get even lower, we got price retracing up into this suspension block right here. Wait, are we on an MQM or MQU? Oh, I might be on the wrong contract. Yeah, I think I am on the wrong contract. Wait a second. Hold on. My bad. Hold on. Let me adjust this. Let me adjust this. Uh, wait, are we seriously on the M contract? Wait, hold on. See, I feel so unprepared and retarded. Anyway, we're just gonna trade. I don't care. We're just gonna trade. Okay. We understand that price is gonna go lower. All right, and we're gonna look for our entries. And I'm just gonna set this back to the 15 minute because you see how the data is looking. It looks like I'm on the wrong contract, but I guess I'm just not. Anyway, let's go ahead and play this. This is gonna be on 100% speed just to keep it real normal because I want to explain some things here. You're gonna see exactly what I'm talking about. So looking here on the 1 minute, we do have this order block here, it purging liquidity, coming back down. And then we have it creating an immediate rebalance right here on the 1 minute. And then on the 15 second, I mean, this is just looking real choppy. So I wouldn't even pay attention to the 15 second. But on the 1 minute, it's looking kind of decent. See what I'm saying? It's looking okay. It's looking all right. Then we have this propulsion block that was weakened here because it got used, but it's not necessarily exhausted, but it is weakened, so price can run through that. Now I'm just waiting for this immediate rebalance to, flip back around and start displacing lower. And then I'll enter shorts for 4 micros. We're going to speed this up just a little bit. Wait, no, I probably don't have to. It'll hurry up and displace already. Come on. Speed it up to 200. Once it starts displacing lower on these next two candles, like actually, running past the candle's bodies and past that wick, I'll enter shorts. Hasn't done it yet. Hold on. And now we're into
Order
it. Okay.
filled.
So we officially have our entries in, and I forgot I was connected to my speakers and not my headphones. So I just heard order filled like at 50% volume, extremely loud. Anyway, we're in. We're in shorts. Okay. Now here's one thing I want to explain to you. Majority of the ICT 6 month new gen LARPs that are on Instagram and TikTok, they don't even know what an immediate rebalance is. Okay. So just know right off the bat that you're learning something. If you don't know what this is, I have it on my YouTube channel. And plus there's a section 2 coming up right after this video that I have to edit and then post on YouTube. But what I'm basically trying to explain to you here is that they don't even know this. So if you understand that they don't even know this, just imagine how unprofitable they are using break evens, okay? Now, for example, if I was to set, I'm not going to actually get out of this trade because we don't do break evens here. But let's just say we do what the average person does and set a, let's actually do it. Let's actually be stupid and be one of the ICT LARPs and actually set a break even. Right, we're going to let it displace a little more. I'll do it when I actually see um Like right now, they would wait for it to go a little lower, or they would even get break even right now because what we're up 20 points of profit. But I'm not gonna do that. I'm gonna give them grace. I'm gonna give them grace and let prices place lower just a little bit. Maybe go past that low right there, and then I'll set quote unquote break even, which is risk management, which is not true. Come on, go or lower just a little bit more, so I can set break even for the new gen larps. Come on, guy, you're taking too long. Does it ever go below that swing from this point? I think it does. I don't remember yesterday's price action, but I'm pretty sure it does go below that swing. This might be like an hour 30 long lecture. I don't know. Okay, this is the pre-recording JJ, so I don't really know what the post-recording JJ and how long he'll be recording for. But I definitely I'm gonna be on this for at least 2 hours. Okay, so just be ready for that. And we are consolidating heavy on here on the 15-second. Look at that. So we're just gonna wait for this thing to go below down there and um go below that L so we can set break evens. Like the average LARP trader. ICT LARP. We're up 30 point. Well, what are we up? 20 points. About to be 30. So we could set a break even right now and get break even, right? But we're gonna give them grace and let prices place below this low before we do it, just to see if this thing works, just to see if it works. Okay. Yeah. Now we'll do it. Now we'll set a what is this buy stop?
Order working.
Yep, we're gonna set it right there.
Stop filled.
And look at that. We've been stopped out. Oh my God. So cool, right? So cool. We are such good traders. We just got out on some random break even. We don't even know why we just got break even. We got no insight out of that. No insight at all. Nothing. We didn't get anything out of that. I want you to tell me from us just getting stopped out, did you get anything out of that? Like from our entry, right? And from where we got break even at, did you get any sort of, you know, insight or actual lesson out of that? No. There was no reason for us to get stopped out. That's why I call break even stupid, retarded. And you should do the same thing. They are stupid, retarded, and idiotic, and every possible word in the dictionary that describes stupidity. Got it? So we've officially, for the ICT New Gen 6 month LARPs, we've been stopped out, right? But let's say I was still in that trade, which was what, like around here at this line? Let's say I was still in that trade. If I was still in that trade, right? My stop, I think my entry point was like right around here. That was my entry. Okay, that line is my entry. My stop would have been right here. Okay. Now watch this. You're probably like, why is your stop gonna be right there at that candle? Because one, we had an immediate rebalance which got delivered right after that candle. Okay, that candle created an immediate rebalance, retraced and respected this order block, and created a propulsion block in itself. So this is a very, very, very protected point right here. So we're gonna set our stop right at that candle's high, if I can do it. And this is where my stop would be. Right there. We're gonna have a
Order
buy stop right
working.
there. And if that gets hit, at least we'll know. We will then gain insight. Okay, this is the big difference here. At least we'll gain insight that price does not want to respect this point, and that we could possibly, since it's 10 a.m., that we can possibly just not want to deliver at all, and we could be in low probability conditions. Simple, simple, right? Well, we're gonna see if this gets hit, but for right now, we're gonna be dumb, and we're gonna say, "Oh, we're out of the market. We can't trade no more. We got break even," and then we're gonna wait for price to displace like 100 points before we enter and get another break even. So I'm just gonna show you. I'm really just gonna show you in price. And Jesus, we're on 400 speed. It's moving pretty slow. Anyway, we're gonna wait for another valid entry here. I'm gonna look on the 5 minute over here while consolidates and does its thing. What are we doing on the 15 minute here? Oh, wow. Well, I would say we're in this rejection block, but it hasn't even formed yet. So can't really count that. We'll go back to the 5. Yes, yeah, nothing here. So we are displacing lower. Oh, wait, no, that's the 1 minute. Let me take it back to the 15 minute. So here we got institutional order flow entry drill. I could pause it, and I pause, okay? I'm gonna pause it, and well, I can't slow it down because then it'll unpause it, right? But do you know how I do my entries? Okay. You're actually learning a lot here. You're learning how I take my entries, like actually looking for the reaction and the respect of the array, not just when price hits the array. That's another thing that those stupid people do, and it pisses me off. I'm sorry. Sorry for crashing. I think I'm actually starting to become ICT, but it's stupid because I'll see them place a limit order right here, right? Now, mind you, when you place a limit order right there, one thing that you don't know is going to happen, you don't know if price is going to respect that or not. You're just getting in because it touched it. Right? You're just getting in because you touched it if you set limits there. And that's what all the new gens have been doing. I don't know where these new people have came from, but that's what they have been doing. They've been setting limits, then they'll get stopped out, and then price will completely destroy and rip through their array or limit order, and then they're down to what, $1,000 after price runs through the array because they never even looked at the actual candle itself to confirm if price is going to respect it. Okay. So what we're going to do is wait for price to actually displace and run away from this so we can get a confirmation that we'll basically only see profit or rarely see any drawdown when we actually enter our trade. Ready? So I'm going to that's our old stop loss, by the way, that we're going to move that stop loss down according to this next entry. So we're going to go ahead and cancel that. We're going to adjust it to 110% speed if I can speak. And once price starts displacing lower past that low or even past that intermediate term low there, I'll enter shorts. But I'm basically just want to look for displacement and reaction. Okay. Remember, this is the 15-second over here, and then we have the 1 minute, and then basically whatever analyzation time frame I want over here. So once we see that displacement, I'll be entering shorts. Oh, we might be getting it here. Hold on. Potentially, maybe, possibly, maybe, potentially. If you'll give it to me. Ah, yeah. Nope. Nope, nope, nope. You're probably like, why didn't you enter, JJ? We started seeing it displace lower. We started seeing it displace, but we did not start seeing it displace past this low, and that's what I'm waiting for. Oh, oh, there it is. All right,
Order
now we're short.
filled.
Okay. Since we're short now, we're going to actually, set a stop loss now. Right? We're not obviously going to set this to break even like a retard. So let's actually look at price. Okay. This is, our old entry, so we're going to delete that. Now let's look here. We have an order block that barely got formed into an order block right here. We have this order block, which price retraced into it, dropped lower, and within that swing formed a fair value gap that also formed an not intermediate, but institutional order flow entry drill. So that swing or that candle's high can be used as a stop loss. Remember, if you ever watch the video of me teaching fair value gaps or even watch a single teaching of ICT teaching fair value gaps, you know that you can set your stop right here. You're probably like, but JJ, that's a 50-point stop loss. That's 50 points. Why would you do that? Because if you do break even, you won't have to lose that much. Well, idiot. Sometimes price is going to be in large ranges. Okay. Do you not know what that is? Do you not know what range expansion is or range consolidation is? Okay. Typically, after a large move, like an extremely large move, like 1,000 or 2,000 points, or just something extravagant or just through the roof, price is going to expand ranges. It's naturally going to deliver more points throughout the days of price action. Hold on, let me take my Invisalign out because I sound like a retarded kid that can't speak. Got these things, I'm gripping my teeth. But basically, what I'm trying to say here is don't do break evens, okay? And instead look at price and what makes sense to price, okay? Understood? Understood, understood. Now, another thing we could also do, right? Since this entire leg was a displacement leg, this is also a trailing stop mechanism that I came up with, okay? Like if you entered all the way up there, like if you top ticked it or something like that, you could actually set a trailing stop within this area here. But since we had a displacing leg, right? And then we had a mitigation block on the 1 minute form right before we started displacing past that low, which created this leg or was actually, digging deeper into this leg's creation, you can actually set your stop right there above that mitigation block. Right there. So if you want to be
Order
aggressive and
working.
want to minimize your risk, you can set it right there. Simple and easy, right? Or if you want to be safe, you can set it right there at the second candle of that fair value gaps creation. Now we're going to speed this up and see what happens, okay? We're going to speed it up and now we're going to set a target. Okay, where are we targeting, JJ? Let's see. So I remember this being yesterday's price action. Okay, so we have a consolidation. Do we have a complete jump up through the roof? So we have a liquidity void. If price starts if I can, get it stable, there we go. If price starts disrespecting this liquidity void, in which it's already doing now, um, what we can expect, let me actually get a fib because it's horrible to draw on here. Oh my god. Let's see, we're just gonna get it from right here to right about there. So yeah, we're completely running through the 50% right now. If you look on the 1 minute and the 15-second, we're completely running through it. So if we continue seeing that, what we're going to obviously do is set our take profit at the bottom of the liquidity void, which is what? Right here. Or since it's violating this mitigation block too, we can set it right there at that low. Or since that low is right next to this propulsion block, we can set it right there at the propulsion block's low. So what would that be? That'll be a buy 4 limit.
Order
In which,
working.
mind you, I haven't even hedged yet. I've actually been just teaching you stop losses and how to not use break evens. Okay. I think I might go over this day once again. Okay. Using that same immediate rebalance entry. What was I going to say? At the crap, if I can even get it, I'm having such brain fog. But that first immediate rebalance entry at the start of the recording, because I was just using that as an example to get stopped out at break even, stuff like that. But now, okay, I would teach you hedgings, but I'm going to teach you hedgings once we go over this day once again. But I'm just simply teaching you, simply teaching you how to not use break evens. Okay, I'm just trying to get you in the habit and actually do it in front of you and show you that you do not need break evens. Okay, even if you're up what 50 points or 100 points of profit, do not use break evens. Don't. Only thing you should be using is a trailing stop. Isn't that basically break even? No, because the way I'm going to teach you trailing stops is going to teach you to trail your stop exactly at a point that price will reverse at, and you won't have to see a potential loss of your unrealized profits. Understood? Understood. Okay. I'm just making sure you understand that. Now, let's look here. I'm going to teach you hedging a little bit. I'm going to teach you a bit of hedging. Now, let me go to my notes, okay? My notes right here. If we go to my notes, this is yeah, these are my notes right here. So look here. Match hedging amount should be 4 to 5 times max, okay? Or basically the amount of times you should be entering should be about 5 times. 5 or 4 times, okay? So that means if you have an initial entry of 1, you should only have 4 to 5 more hedgings, okay? Maximum. Okay, that's maximum. Okay, that's me being extremely aggressive, and what I've seen over time is that 4 to 5 times is pretty good using your initial entry. Or you know what, I'm just gonna keep this here and keep it ready when I'm ready to teach you. Okay, but other than that, I'm not gonna show it to you yet. Anyway, let's go ahead and continue this trade playthrough. But I will be hedging for you just to show you exactly how I do it. So we have an immediate rebalance here. Respect to that, I'm just looking forward to this place lower, potentially past this low here. That actually has the immediate rebalance creation. Then I'll hedge past it once it starts displacing. Just waiting for that displacement. Come on, price. Oh, there it is.
Order filled.
All right, so now you see how our average order price has been dragged down? You see that, right? But you're probably like, what if it goes all the way back up there? And then, oh no, you might have to set a break even. I just hedged properly. Okay. If you understand what hedging is and how to actually do it, you will understand how to hedge properly without that happening. Okay. Now, if you really, really, really want to prevent that, what you could do, right, is have an initial entry. Well, you know what? I just said I'm not going to teach that. Did I not just say that? Okay. We're just going to wait for this trade to play through. Okay. We're just going to wait. And we're going to set a take profit of 8 micros because that's what I'm in right now, which is a pretty hefty amount. I'm not going to lie. So 8 micros buy
Order
limit. And that's
working.
all we're going to do. Okay. I'm going to teach you hedging after this. Okay. I basically just taught you close proximity stop losses, in which we're going to keep teaching that, but I'm doing it in order. But as we do them in order, I'm going to keep teaching the other things while we teach, hedging and trailing stops and stuff like that. So we're going to wait for this take profit to hit, and we're going to move on to hedging. Okay. Hedging is a really, really good thing if you want to really, really maximize your profits, like really, really, really maximize your profits. Okay. So since our average order price is right here, right, that means our stop loss has to get dragged down with us. So we would want to set our stop loss right there. You're probably like, why right there, JJ? Because this is the swing or the leg or the displacement leg that we entered or hedged off of, in which our average order price is now at. That displacement leg contains the respect of this rejection block, of this what is that? I guess yeah, that's an order block too. An order block, mitigation block, and rejection block all in the same area. It respected that, then created an immediate rebalance and started displacing lower. So this entire leg here, or this entire area of price, is pretty protected. And as you can see, the point of respect and displacement was right there. It started right there. So we can set our stop right there for about what, 20 points. Oh my God, JJ, it's 20 points. No, I can't take that. I need to risk 1 point, break even. I cannot do that, JJ. No, I'm not learning from you. I'm unsubscribing from your channel. No, no, no. Oh God, oh my goodness. I swear there has to be some dude reacting like that. I swear to God. Anyway, We're just gonna wait for this trade to hit, and I'm going to speed this up from now on. No yapping, and we're just gonna wait until this trade hits, and we're gonna reset onto the same price action, but we're gonna teach hedging on this price action. Understood? Okay, cool. I'm gonna speed this up, and I'll see you later. All right, we're approaching take profit,
Order filled.
and there it is. So, would it be wrong to say that I fixed me a bowl of cereal while I was waiting for that? That was like 10 minutes, like 10 minutes of actual elapsed time that just passed of me eating a bowl of cereal and watching that play out. Beautiful trade, and as you can see, our stop loss, if we look, did not get hit. Okay, when you do it properly, what is it? Calculatively. Jesus, a tongue. Oh my God, that whole word just threw me off. But once you do it properly, precisely, and calculative, you know what? I'm not even gonna say it. You know what word I'm trying to say, okay? But and once you do it properly, calculatively, and actually do it based off of ICT concepts and not based off of points and just stupid factors, then look at this. You have beautiful trades like this that, of course, you have to wait for. You're probably like, JJ, what if I have to leave? Or just exit the trade. Simple as that. You can simply exit the trade if you don't want to go through the stress of watching it, or you can let it hit take profit as I just did. I literally left the screen, went to go make a bowl of cereal, and look at that. That propulsion block got violated over there. If you want to see, it got violated and ran our take profit for what? How much was that? 200 points, I think. I don't really know, but it was about 200 points. So now, since I've kind of sort of taught you how to set close proximity stop losses, I'm going to keep teaching you that over the time of this recording. But now we're going to be focusing on let me reset replay. We're going to be focusing on hedging. Okay, we're going to be focusing on hedging. And we're going to go back to 957. We're going to use that same immediate rebalance entry. Okay, don't worry. That same immediate rebalance entry. And instead, we're going to keep it on 400% speed just to keep it nice and fast. All right. And for some reason, it is not loading up my file. So I got to pull that up real quick. Hold on. It's not pulling up my file. Hold on, guys. Hold on. Hold on. There we go. There we go. There we go. There we go. Now it's pulling up my file. Boom, now we got my template back up. Nice. Now let me adjust this real quick because it tends to do this. And boom, there we go. We're going to enter for 4 micros as we did before. So 4 micros, okay. Oh, there it is. It's
Order
already
filled.
moving without me, and we, for some reason, got auto trading on. Let me turn it off. Off. All right, now, okay, because this is moving extremely fast. I'm trying to like see what pace I should be teaching at while this thing moves pretty fast, because I'm going to be keeping it on 400% speed, okay? Remember, our stop is going to be right here at, what's that? Right there. So we're going to set it to 4. Stop loss is going to be right there. 4. That's a buy stop. There we
Order
go. Because we're
working.
selling. All right. Now, when it comes to hedging, okay, one thing you need to understand. Actually, I could just go to the notes while this thing moves around. We don't need to focus on it. I did get mentioned, but I can't be looking at it right now. I'm recording, guy. I'm recording. Anyway, look at this right here. Okay. Just this area right here. I'm going to highlight it for you. This area right here. Okay. Now, I mentioned this earlier, but your max amount of hedgings should be 4 to 5 times maximum, okay? Obviously, you can do anything below that, whatever you feel safe with, but maximum should be 4 to 5 times, okay? Because after 4 to 5 times, your average order price will get dragged down pretty quickly, and any mini retracement um will tend to take you out if you do break evens or you're just really scared of losing, like, or being down $1,000. That can happen with hedging. I'm warning you. I am warning you that can happen if you do it improperly. But I'm going to teach you, of course, how to do it properly. Now, our hedging techniques, okay, our hedging techniques right here at the reaction and respect of arrays, meaning when price hits an array or what's the word? Creates a signature and hits it, respects it, and reacts off of it, you can hedge there. displacement through swings slash mini consolidations that form throughout delivery. So let me show you what I mean by that. Let me show you an example of that exact thing that I'm talking about. So stuff like this, right? You see this little mini consolidation right here? See that very, very small, basically time distortion, okay? Once it displaces through that, like actually starts running through it, you can add a position there, okay? Now, there's two options you can do when you do actually add a position. I don't think I mentioned this right here, okay? But you can either hedge with your initial entry amount or hedge with half of it if you want to be safe. Me personally, I hedge with the same amount of my entry amount because I've been hedging for so long and I just know how to do it. And that's something I can't give you. Not saying that I'm not going to teach you it because I'm actually teaching you what I do. But the experience part and being able to do that aggressively and safely without being afraid of doing it, that's just experience in chart time. Basically time in the charts. That's something I can't give you. That's something you have to back test yourself, experience for yourself, and basically trust it and feel safe with it. I can't, actually give that to you and just say, here, I'm going to put my brain inside of your head and boom, you trust everything you know. I can't do that, obviously. So you're going to have to take the time and actually get the experience and the trust to be able to trust hedging like that. So if you do want to hedge below this swing, if it does, this places past this swing right here, in which I think is about to do that very, very soon. There's two things you could do. You could go half, which is 2 micros because we're doing our initial entry was 4, or you can enter again at 4. Now, I would recommend to maximize your profits. I would recommend if the latest or the yeah, if the latest potential hedging that you see, which is below that swing right there, if it's close or in close proximity to your initial entry price, which is 35.20 or just pretty close in price in general, then sure, I would recommend using your initial entry for just that one hedging that's close to your initial pricing. So once we see price displace past that low right there, let me turn off the grid. Sorry, my bad. Let me turn that off. Once we see price displace below that, keyword can, we can actually hedge below that low with our same amount of initial micros or lots or positions, whatever you want to say. Because it's close proximity, you're not going to see the average order price move that much. So just pay attention to the average order price once I place this or hedge into this. Just watch. Ready? Once I see it displace past that low.
Order filled.
See, it didn't move that much. Probably like, oh my god, it moved right next to that candle, JJ. Exactly. What else? What else is it going to do? Did it go past that swing? No. It moved down just 20 points because you hedged close to your initial entry. So you're probably like, would we still keep our stop up there? No, 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 of course not. No, definitely not. I would say after your first close proximity hedging, that's close like this to your initial entry, you can drag your stop loss down. You can drag your stop loss down, okay, in which we now have to find a point at which we will put our stop loss. So we have that order block getting respected there. And actually, let me stop that real quick because I want to hedge more. I want to show you how to actually hedge and maximize your profits. We're going to be targeting that same propulsion block, okay? And I'm gonna show you the difference between the profit we made after I edit this recording because I think the previous trade was like $3,000. This one might be like 5 or 6 grand. Okay, you're gonna see the difference when it comes to actually hedging, okay, and actually knowing where to hedge and how to do it safely. Now, looking for our stop loss, our close proximity stop loss, we have this order block, came back up, respected it, displaced lower, institutional order flow entry drill that formed within this swing here. So we can set our stop loss right here at the mitigation block that formed after respecting the institutional order flow entry drill if you want to be aggressive, or if you want to keep it safe and maybe let price move around a little, you can set it right here. But of course, we're going to be aggressive. I'm going to teach you how to be aggressive and safely aggressive. And there we go. It's right there. So we're going to keep playing this forward. And actually, I just showed you an example of what's the word? I just showed you an example of, let me go back to my notes, of displacement through swings and or mini consolidations, which is basically time distortion, that form throughout the delivery. Okay. Immediate rebalances. Immediate rebalances are very, very good for hedging. Okay, this is why I put this in here. Now, when it comes to immediate rebalances, you want to, how can I explain this? You want them to form. I don't know why I said with distance. I don't know why I said that. I'm trying to explain why I said that. But these are the two things I meant by that. You want to wait for them to form a little far away from your initial entry, or you want to wait for the immediate rebalances to actually do their immediate rebalancing thing and displace away from them. I think that that's the only two things I could have meant by that. And then, of course, I said, with this, I must teach you how to spot displacement and short-term price action, which I am teaching you that if you're indirectly paying attention to the displacement of the candles and actually paying attention when I hedge and when I look for displacement, then this is already being taught to you indirectly, okay? When to hedge within candle delivery, basically the same thing I'm saying here, but it's just actually looking at the candle's energy and looking at the candle's willingness and its actual action and what it's actually doing and how it's playing out and saying, okay, right here's when I should do it. At the snap of a finger, right there, looking at how the candle's acting, I should do it right there. That's what the when to hedge within candle delivery is, in which I'm going to be teaching you this throughout this video. If you just actually look and pay attention to when I do it, when I hedge, where I set stop losses, where I enter at, you're going to obviously get all of this. Understanding distance and context with the draw on liquidity. Okay, understood? Now, I was going to teach delayed and precise entries, but but I think I might teach that at the end of the video, so someone remind me if you could in the comments. I might make a section 2 to this, or I might just remember it myself and teach it at the end, okay? So understanding distance in context of draw on liquidity. Now, where is our draw on liquidity? Probably like, Where is that at, JJ?" So let's go ahead and actually, I was about to go to trading view, but let's go back to trade of 8. Since you understand all the potential ways you can hedge now, we're going to set this to 15-minute or hourly, and we can see that our draw on liquidity is right there. See that right there. So what you can do, right? And this is what I normally do, just to keep it real safe, is okay. We got our Fibonacci right there. To where was our first entry? It was at like 520, right? So you want to get your initial entry to your draw on liquidity. Okay, I'm going to drag that up just a little bit because it's a little off. Okay, there, drag it up just a little bit. Now, most of your hedgings you want to see occur in the 40 percentile, or like the upper 40%, or basically above equilibrium, okay, from your initial entry to the actual draw on liquidity. This is going to keep you safe. So you want to see majority of your hedgings be above the 50 percentile, and then the rest of price just run. Simple. That's what I mean when I say in my notes, understanding distance in context with the draw on liquidity. Okay. So when I say understanding distance, you have to be able to hedge while understanding the distance of your actual. And what the world? Why did it just glitch like that? Oh, what the world? Okay. For some reason, Trade of Eight just completely glitched for some reason, but I guess it doesn't really matter. But you have to understand the distance between your draw on liquidity and say, okay, since we know that our draw on liquidity is right here, we don't want to keep hedging past the 50 percentile because it can retrace on us. It can do a mini retracement below the equilibrium and stuff like that. This is basically just a way to keep you safe. I've said that like 3 times already, but I have to drill this into your head so you understand. You know how I do. But this is basically to keep you safe so you can stay in your positions and maximize all your profits. You get what I'm saying? And before we play this replay mode, just well, oh my God, I'm talking so much. Let me get some air. Let me get some air. I've been drilling you too much. Let me get some air. Let me get some air. Before we begin and start playing the replay mode again, I'm going to go over our techniques again. At the reaction or respect of arrays and signatures, in which I should probably do that, and signatures, displacement through swings / mini consolidations that form throughout the delivery, and immediate rebalances. That's 3 mechanisms or 3 techniques at which you can hedge, okay? Now let's go back here. We're going to full screen it, and we're going to play. All right. You're probably like, now where would we get our entries at, JJ? Either the 1 minute or the 15 second. Personally, I use the 15 second. If you want to use the 1 minute, of course you can do that. All right. Of course you can do that. Now, I would hedge like right here. Actually, let me pause this. Let me pause this. And I'm talking a little fast, so I need to calm myself down, JJ. Reach a zen, reach a nice point of peace and quiet where you can teach your students properly without yapping at 1,000 miles an hour. Okay, I'm calming down. Okay. I just had to I was realizing I was talking too fast. My bad, in which I might just cut that out. Anyway. So, um, as you can see here, prices are retracing into what's that? That order block there. So once we see, oh wow, beautiful flip. So we can enter with 2 micros and wait for that displacement. And boom, hedge
Order
right there.
filled.
Now we have 10 micros currently in which, as you can see, our average order price got dragged down another 20 points because guess what? We went half of our initial entry. We went 2 now. Now this is just being safe. This is being safe. Normally, every hedge I'll do would be my initial entry over and over and over again. But I'm teaching it to you the safe way, so you won't come back to me and be like, JJ, I blew my funded. Frick you. Ah. Said, "No, I'm just not. I'm not even gonna risk that." Okay. So since we have 10 micros in above the 50 percentile, look over here. Since price is at the 50 percentile, I would not advise hedging past this point. Now, if it does retrace back above the 50 percentile from your drawn liquidity and offers another point of hedging, in which is doing right now, you could add another if it actually, respects this immediate rebalance and actually delivers lower. But we are touching that order block right there again. So if we see price actually reverse and not disrespect, but respect and react, that's the words I'm getting to, off of that order block, then yes, you can hedge once again. But we got to wait for that displacement and that reaction off of this. We're currently disrespecting it right now, but we're going to see if price is actually going to reverse off of it after hitting that rejection block and order block. You can see that price is moving away. We're going to wait for more displacement outside of the order block. A little more, and little more. Right there.
Order
We're gonna add another.
filled.
Now we're in 12 micros, okay? And since we're going back below the 50 percentile, we're not gonna add any more. Why? Because, for example, if price retraces, if we keep adding and price retraces, basically, in short, we're cooked, we're fried, and we're gonna get stopped out, and then price is gonna keep running without us. Then we're gonna miss out on all our profit. No, you don't want to miss out on your profit, do you? No, I don't think so. So we got all of our hedgings in. We're going to go ahead and remove this since we know we're not hedging anymore. If I can, actually remove it. There you go. It's gone. We're going to set 12 micros here, right at our same point of liquidity, and pay attention to the difference in dollar amount. Okay, just pay attention in the difference of dollar amount from the previous trade we did with only one hedging. Well, that was me hedging just to show you an example of it. But just look at the profit difference. Okay, if you want to scroll back to the trade before, or I'll just after this trade, I'll show you a difference between the actual profit before and the profit that's going to be made on this trade here. So we're going to set it for by 12 limit.
Order working.
And our stop would be, let's see, since our entry price is right here, we're going to set our stop right, we're going to drag it down about right there. Well, no, that's too many points. Definitely not. Since we had displacement past this, what is that? Institutional order flow entry drill, I set it right at that high. We have the stop loss and everything set, and then I'll let you watch this trade hit take profit while I go eat another bowl of cereal like a fatso. And I'll be right back. All right, people, we're approaching take profit once again. As you can see, a huge profit difference between the last trade and this trade. We are up, what, 5,500?
Order
Yeah,
filled.
look at that. Amazing. That was about 5,500. So you see the big difference between hedging and not hedging, right? That was a $2,000 increase. Now, of course, post recording JJ or editing JJ, can you please place the difference between profit on screen? Thank you. If you can actually remember to edit this. You can see, I think the previous one was 3,200, okay? And the current one, as we just did, was 5,500. Big difference. Big difference. $2,000 increase or about $2,500 increase from the previous trade that we took. Huge difference, right? You see the power of hedging? And if you look, even with hedging, our stop loss never got hit. How amazing is that? Pretty cool. Now, since we've gone over close proximity stop losses and hedging and how to do it properly, if you need the techniques again, I'll give it to you before we begin. Here's everything you need. Here you go. Here you go. You want to take a screenshot of that, you can. Next, we're going to be going over trailing stops. Now, trailing stops, that's gonna be a little different. Definitely gonna be a little different to teach because there's different techniques. Now, the one technique that's gonna be a little kind of sort of hard to teach is technique 1, like normal, moderate retracement delivery conditions. Something like, uh, not something like this. Nah, definitely not, but definitely a different day. So we'll have to like go on TradingView and find like some days that deliver moderately. And yeah, I'm gonna go ahead and speed this up and actually look for those days right now. And we'll be back testing and actually teaching you how to use trailing stops and how to actually use them. Okay. If you want to take a screenshot of this right here without me highlighting it, everything is right here. So go ahead and do that. This is all the trailing stop techniques that you need. Got it? Okay, cool. Now let me go search for some price action that matches technique 1, then we're going to go over technique 2, then technique 3. You get the point. So this might be another hour of me recording. So just be thankful for what I'm doing for you. All right, I forgot I had this here. All right, let's go to recent price action. All right, so for technique 1, I found about 3 days. I don't want to go over too many days, but I think we'll go over about 2 to 3 days per technique so you can understand what we're doing because this is going to be a long teaching. Like, oh my God, I've been sitting here recording for what, an hour and 15 minutes? Definitely one of my longest recording sessions for one video. Normally, like a recording session for me would be about 2 hours or maybe 2 hours and 30 minutes. But just this one recording alone, this one video is taking up about half of that. So let's go back to, we're going to keep everything here June 8th, June 5th, June 4th. And we're going to go to Tradeovate and do June 8th first. And for some reason, I still have this price action being printed. So we're going to reset the replay. Reset the replay. Then we're going to go to, what did it say? June 8th? Yeah. June 8th, Monday. Oh, wow, that's a Monday, really. Okay. When did price start displacing or start actually moving on June 8th? Let's see. Started moving around, I'll just do 10 a.m. 10 a.m. on the dot. All right. So 10 a.m. Bam, bam. Oh, wait, nope, nope, nope. Up, there we go. Alrighty, here we go. Now, trailing stops. We're going to be doing everything that we've learned so far, but just including and focusing on teaching you trailing stops. That's it. Simple as that. So we're going to go ahead and put on, let me maximize this first and then put on my file. And there we go. It's loaded up. So we're going to pull this over just a little bit, pull that over just a little bit, and boom, everything is perfectly balanced. And pull this down. There we go. Beautiful, 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 beautiful. Okay, now that we're here, this is June 8th, right? Yeah, this is June 8th. I do recognize this price action. Okay, let me go ahead and pause this because Jesus Christ is moving fast. All right. So before we actually, what's the word? Go over and actually apply this, you have to, of course, learn it first, right? So let's go over my notes and technique 1. Okay. Trailing stop technique 1, moderate retracement delivery conditions, meaning you'll see. I can like show you back in trading view. Like you see how price is going up within the swing here. It's going up. It's delivering. It's delivering. But every retracement is very moderate and very kind of small. See, retracement right there, retracement right here, retracement there, retracement there. It's very moderate and very small. You see what I'm saying? So that's what I mean by moderate retracement delivery conditions. So what you'll have to do live in price while price is moving is pay attention to how price is delivering on the 1 minute, okay, because remember, all techniques will be applied on the 1 minute. Remember that. Remember that. All techniques will be applied on the 1 minute time frame, okay? So what you will have to do live in price is actually pay attention to how price is delivering and think about all the techniques you're about to learn and see which technique that price matches and follow the directions according to that technique. So if it's very tenacious delivery with minimal and stubble retracement conditions, basically saying very aggressive and not aggressive, but it's basically going up but barely retracing. Like if it does retrace, it'll be very minimal, but it's still focusing on going up. That's what tenacious delivery means. Basically means it's going up and it doesn't have no idea of stopping. And with minimal and stubby retracements, basically means very small, short and stubby retracements. Okay. So technique 1. When the latest displacing leg begins, printing deeper into price. Oh, holy, I completely messed that up. Well, let me start that over. When the latest displacing leg begins printing deeper prices during or within the current delivery, trail your stop to the earliest or strongest array, excluding fair value gaps that forms, which will be around the beginning of the leg or when the leg is making or has made its swing. Now you're probably like, what in the world did I just hear? What does that even mean? I'm gonna show you that in just a second, okay? And I'm gonna read that one more time. I'm gonna try to filter some words out because I was just writing this as a rough draft. When the latest displacing leg begins printing deeper prices, okay, that means like in the current swing, when it's making its swing go higher and higher and higher, that current leg, delivery leg is going higher and higher and higher, creating a bigger leg. That's what I mean by deeper prices. It's printing a bigger leg. So when the latest displacing leg begins printing deeper prices during or within the current delivery, basically the delivery that we want to trade, which is this right here. See that? That's the delivery we're talking about. Within the current delivery, trail your stop to the earliest or strongest array that forms, which will be around the beginning of the leg or when the leg is making and or has made its swing. Understood? Okay, now I'm going to show you that in just a minute. Focus on that right there. Just say this in your head multiple times and remember that. Or just screenshot this entire thing if you need to. Okay, I'm going to keep reading. Mitigation blocks can be adjusted to if they form further out from the previous trailing stop and past the previous leg. Okay, if the latest displacing leg's creation. Oh wait, hold on. I need to re-say that because I didn't see the beginning. If the latest displacing leg's beginning of formation slash swing creation is inside the previous leg, wait for price to move outside of the previous leg, creating deeper prices, basically, making the leg even larger, creating deeper prices to then start slash continue trailing your stop right around or outside the previous leg. Now, I know this is going to stir a lot of confusion. I'm going to go over this in just a second. Now, the only time I'll say do break even, only time, is if price doesn't offer a chance to trail after breaking outside a previous leg and begins reversing, set to break even. That's the only condition you should set break even in because it actually makes sense. Understood? Understood. Now, we're going to get our initial entry in on Trade Sorry, I just had to rub my eye because my eye was itching. We're going to get our initial entry right now. We're going to wait for that. We have a 1 minute order block here. We have this fair value gap. There's a lot of things going on here, but let me set this to the 15 minutes so we can get a little bit of a better view. All right, so we got a institutional order flow entry drill down here, so we can clearly see that price is respecting that. Then we have this respect to the order block here. Now, we could enter here, but I think we just missed it. But we're gonna wait for displacement back above that order block. Or, what, since price is moving pretty cleanly this day, we're going to look for we're going to go in 4 micros, obviously. we're going to be looking for a 15-second entry since it's moving pretty smoothly. Let me go ahead and pause this and find our draw on liquidity so we can hedge properly. Wait a second. All right, hourly, we got, I don't know, there's really not a lot to target here, honestly. If I'm being real with you, there's really not a lot to target. Um, okay, you know what? What I'm gonna do is select a target on here in hindsight and then see if it actually gets hit on TradingView. But we could target just the beginning of that fair value gap above that high or just that high in general. So we're gonna see if either of those got hit on TradingView. Hold on. Let me see. Okay, yeah, so that high got hit. Now let's go back to the hourly and see if that fair value gap I'm talking about got hit. Where's June 8th? And yep, it did get hit. Okay, so yeah, I was right. We're going to target that fair value gap. Probably be like, oh, JJ, you have to go back and confirm. Of course, I want to confirm. I don't want to look stupid in front of my students. I mean, I know what I'm doing, but it's like I still don't want to look stupid. I don't think anybody would want to look stupid, would they? Anyway, we're going to grab Fibonacci. And well, actually, I can't even do that yet because I don't know where our entry is going to be at. So I have to wait for us to get our initial entry. So let's go ahead and look for that. Well, we're going to be entering off the 15-second if we can find an entry here, but we do have a order block right here. So if we start seeing displacement away from it, oh wow,
Order
okay, yeah,
filled.
that's the displacement I was looking for. Jesus Christ, let me get rid of that order because for some reason automatic trading mode keeps turning on. Since we have our entry at that order block, we're going to pause it real quick and set our stop loss at the order block. Or actually, wait. We have a propulsion block right here too, so we could drag it up right there to that propulsion. Right, if I can get it right on the candles low. Oh, no, I didn't say do that, genius. Right there, candle low. We're going to be doing a sell stop right there. Boom, now we got our stop loss. Oh my God, J-Day, it's almost 40 points. Lower your size, idiot. Oh my God, I just told you this.
Order working.
Prices in large ranges or is moving in extravagant amount, just lower your size. It's not that hard. Anyway, we got our stops down here. We're in, and since we have our initial entry in, now we can actually draw our Fibonacci. So here we go, Fib from there to, what's that, right about there? If I can even get it, holy. Right there, boom. So anything below 50% or anything above 50%, we don't want to hedge anymore. So I think it also shows, well, no, it doesn't show on these charts here, but that 50 percentile is 515 or basically 517. So we can hedge anywhere below this, and let's go ahead and start playing. I'm going to talk about the trailing stops in a minute on this time frame right here, 1 minute, because all techniques will be applied on the 1 minute. So if we do get well, what was I about to say? Some displacement off of that propulsion block, and actually, some reversal and reaction and actual respect to that propulsion. Then I'll add another one of 4 since this is close proximity of our initial entry. Oh, I'm waiting for that displacement. Come on, give it to me. Give it to me. Oh, there it is. Boom.
Order
All
filled.
right, now we got another one in. I should have added earlier, but it was just moving too fast for me to register it. So we're in 8 micros right now. So since we got one initial entry, we're going to move to 2 micros. Okay. We're going to move to 2 micros and see if we can get any more hedgings here. We have a potential immediate rebalance forming right here. Oh, there it is. Potential immediate rebalance. If it respects it, I'll add another one. Up. Come on, give me that displacement. I'll add one more. Give me that displacement. Come on. Right past the candle bodies on the 1 minute. Right up there it is.
Order
And I add
filled.
another for 10. Where are we at right now? We are at 29,440. So I'm gonna wait for us to keep displacing. I think honestly, this might be our last point of hedging, honestly, because we are approaching, yeah, we're definitely approaching the 50 percentile over here for our draw on liquidity, which is like, what's that, like 515, 513. So yeah, we're definitely approaching that. And since we have been hedging, we can drag our stops up to about, I guess you can say right there. Yeah, because it had that institutional order flow entry drill below it. If we see a displacement past this time distortion, we can add another. Oh, there's a displacement right there, but I'm going to wait for it to really, really move through it. So once we get that displacement or that real run through that, then I'll actually, add another one. So we're going to wait for that displacement. Oh, and
Stop
we've been
filled.
stopped out. Oh my God. Beautiful stop out. Holy.
Order filled.
All right. So that was, what did we lose on that? About 700. Well, no, was that 700? I don't remember. About 500. Okay. So we're going to look for another entry. My bad, guys. Oh my god, JJ's so unprofitable. Oh my god. It's called risk management, genius, not risk elimination. Anyway, we're gonna look for another entry here since we got stopped out on our hedgings. Well, how much did we actually lose? I actually don't know. It looks like we lost way more than that. Wait, I'm curious. Oh, okay, so about 523. That's not too bad. It's not too bad, not too bad. So what do we lose? Like 10% of our drawdown on a simulated 150K? That's not too bad. So looking here, we violated that right there, came back down, filled that, then we hit this propulsion block once again. And then we do have accumulated liquidity above here, above that time distortion. So let me see, I'll be waiting for, we're gonna go back to 4, and of course we'll have to adjust our fib. If we get some displacement here, oh wow, okay.
Order
Jesus Christ, I
filled.
couldn't even, dang, I was moving so fast, I was on 400 speed. Okay, now we are currently in. And I'm going to drag the fib. Oh wait, no, nope, nope, nope. Up, no, I didn't say do that, genius. I didn't say no, no, no. Come on, don't, come on. You don't gotta do this to me. You don't gotta do this to me, man. You don't have to. Our stops are gonna be right below here at that order block. So that is gonna be. Wait, we're buying, right? Yeah, so it's gonna be sell
Order
stop.
working.
Let's see. Drag our target below here, right there at that fair value gap. So 50 percentile has now been moved to 545. Okay, which we might get stopped out again here. I wouldn't be surprised. Never mind. But we are going to add another one above this accumulation once we displace past it. I'm waiting for it. Hold on. Oh, I forgot to go in 4. Oh, there we go. Boom.
Order filled.
All right, now we're in 8. Okay. Remember, our 50 percentile, or where we should stop hedging, is at 545. So I'm just trying to get our entries in and actually make sure we're in a trade so we can actually start doing trailing stops. So just give me a minute to get our entries in. So since we got our close proximity of the same initial, we're going to change it to 2, or basically half of our initial entry. All right, we got our stop all the way down here, but obviously when price starts displacing away, we're going to, adjust it, obviously. All right, let me see on the 15-second if I can get any other add-ons here. Oh, wow, nope, just completely displacing. Might hit our 50 percentile before we can add any more. What's the 50 percentile? Like 545, I think. Something like that. We do have a 15-second meter rebalance. If it keeps going here, yep, I'll add
Order
another.
filled.
And we're getting close. We're getting darn close, and I could add one more if it displaces here because we got another meter rebalance. Oh, nope, that immediate rebound's been totally violated. So we're not going to add any more there. Now, since we have a little retracement here, rebalancing this imbalance, one of the techniques was if you see displacement through a swing that just formed throughout the delivery, you can hedge past that if it displaces through it, of course, because you want to look for that. You always want to look for reaction and displacement before adding anything or even getting an initial entry, okay? So we might just be getting 12 micros here if we displace past that swing there. Oh, there it is. And
Order
I'll be adding
filled.
another. So we now have our 12 micros. And while this plays out, I'll be showing you, let me see, where should our stop loss be? Let me see here. Hold on, hold on. Yeah, this is a very confusing price action on 1 minute. I might just set a 15-second stop loss, which will be, hold on, mitigation block. Then we have this order block here. Well, no, would that be an order block? No, that would be an order block. So I'll drag stops of 12. So hold on, let me pull this down and drag stops of 12 to about right here, which is a, since we're buying, it'll be a sell stop. I
Order
keep getting
working.
confused about that. But anyway, we're in, okay? Now, when it comes to trailing stops, what you want to build up over time is a preference or an amount that you feel safe with, okay? So what I mean by that is we're up in profit, what? About, what's this? 40, 50 points away from our average order price from like, all the hedgings that we've done. So what you want to do is identify like a point that you feel safe at in which price is far enough, literally, from your what's the word? But then we're not hedging anymore because it's past the 50 percentile. So let me go ahead and delete that fib. There we go. So we're going to basically if I can, actually trying to get what I'm trying to say, you want to find a point, and it's displacing really fast. Hold on, chill. You want to find a distance in price or an amount that you're up to say, okay, I feel safe being up this amount. So this is when I'll start trailing. Like right now, since I'm up what 130 points, I would be willing to start trailing now because price is actually displacing and I'm up a decent amount. So what you have to do is this is something I can't give to you either. You have to find your decent amount or that an amount that you're comfortable with being up in profit to where you feel safe and to where price you feel like price won't retrace on you or you feel like you're safe, you're in the safe zone, you're good. That's basically what you have to find. So right now, I would be in the safe zone. I feel comfortable being up 130 points. I feel totally comfortable with it. Now, if I want, I could wait for price to displace past that swing, in which I'm going to do that. And then that's when we'll start applying the actual what's the word? The actual technique of trailing stops. So we're going to wait for price to displace past that swing. Hold on, give it to me. Give it to us, price action. Come on. Is it on 400 speed? Yeah, it is. It's just price is just slowing down. Okay, we got that 1 minute immediate rebalance. We could see the displacement soon if it actually, respects that immediate rebalance and actually delivers on these next two candles or this candle and the next one. But of course, that's up to price. So we're going to give it some time. Right here's that second candle. The second candle should start displacing because this is the last chance for the immediate rebalance to form or start delivering. And there it is right there. Oh, whoa, what the heck was that? That was crazy. What was that? 1040. That was a little odd. That was crazy. But anyway, we still got that second candle displacing or initializing the displacement higher. So once I see a break past that high or displacement past it, because I'm already comfortable with the amount I'm up right now. So once I see the displacement past that high, that's when I'll start trailing. It will actually apply the trailing stop technique. Waiting, I'm waiting, I'm waiting. Just had to pop my finger. So while we wait, how's life? How's the weather over there? I know this is a very, very long recording that you're watching. Hope you're not exhausted from me yapping. But I hope you're learning something from this. I really hope you're learning something to not use break evens and stuff like that. I hope you're learning that. I hope you're learning that. So we're gonna wait for price to displace past that swing, and then yeah, we'll start trailing. So yeah, there's two ways you can start trailing. Either find an amount that you're comfortable with, and to where you understand that at the distance of price that at the distance that price is currently at, there's a very, very small likelihood that price will retrace. Basically, you want to find that parameter to say, okay, I feel safe, and according to my experience and time in the charts, price is not going to retrace on me. Okay, in which I understand from just years of experience, in which there it is, it's displacing through that swing. So now I'm going to pause it. Just years of experience, I feel that once I'm up this amount and I see that displacement and it's actually going higher, and I'm up 130 points, I can say over time that okay, price is likely not going to retrace all the way back down to my entry point. It's just likely not going to do that. Or if you don't want to do that and you want to be even safer, you can look for a certain parameter or swing or a certain point in price to where you say, okay, once it goes past this swing, I'll start trailing in my stops. And make sure you find the swing based off of ICT concepts and not just some random swing. Okay. Because now we're flipping it around. Have you seen those traders on Instagram and TikTok to where they have a certain swing that where they'll go break even at? Yeah, you see what we're doing? We're actually flipping it on them. We're actually going to use certain swings to where we can start trailing our stops, not to say break evens. So for me, above that high there is when I'll start trailing. Now we're above that high, so let's actually start applying our trailing stop technique. Going back to the trailing stop technique, when the latest displacing leg, keyword latest, pay attention to that word right there, latest. When the latest displacing leg begins printing deeper prices during or within the current delivery, trail your stop to the earliest or strongest array that forms, which will be around the beginning of the leg or when the leg is making and or has made its swing. Simple, right? Simple, easy, not too hard. Mitigation blocks can be adjusted to if they form further out from the previous trailing stop and past the previous leg. Simple, right? Super, super, super simple. Now, we're going to go back here And remember, this is going to be applied onto the 1 minute. So let's look here on the 1 minute, right? Let's look at all the legs here. We have this leg, but we mainly want to focus, of course, after we actually take our entry. So this is the latest displacing leg. But of course, we can't trail a stop loss under our buy position. That just doesn't make any sense, does it? No. So we can see the displacing leg here stops and creates another leg right here in this area, right there. Okay. Understand me? Right there. You hear what I'm saying? Right there. So according to what the technique said, what we want to do is when the latest, okay, listen to me, when the latest displacing leg starts printing deeper prices, meaning, printing deeper prices and making the leg larger and actually, going up and printing deeper, higher prices, when it starts in displacing those deeper prices, which is around right here, you want to find the earliest and or the strongest array in the beginning of the leg, in which the beginning of this next displacement leg is right here in that area. That's the beginning. Why? Because the beginning of it is when this swing low is created, and around the beginning is right after, the swing has been created. So anything within this area right here can be used to trail your stops. Simple, right? Yeah, real simple. So what we're going to do is we're going to find the earliest and or the strongest array, it's your preference, in this area. So the strongest array, I would use the strongest, me personally, would be this mitigation block right here. See, got the swing high, come back down, trigger it, respect it. So we have that mitigation block right there. Or if you want to use the earliest array, which will be this order block right there, you can set it right there at the order block, or you can set it right there at the mitigation block, in which me personally, I would set it at the mitigation block. So in which, looky here. This displacement leg has ended because look here. It stopped displacing, came back down, reversed, and retraced. So this displacement leg has ended. So instead, we're going to be looking at this next displacement leg to trail our stops even further and look at the beginning and around the beginning of this next displacement leg to adjust our trailing stop into that next leg. So we're going to keep playing price action and see if price actually displaces through this swing to keep printing deeper prices, in which it does do that right in front of our face. So since we see that it's displacing through it, now we can drag our stops either up to this order block or no, that's not a breaker. That's not a breaker. Definitely not a breaker. So we're going to drag our stops up to that order block because it is the earliest array that's formed at the beginning of this displacement swing here, excluding fair value gaps. Remember, I need to say that explicitly. Excluding, no fair value gaps. Don't use fair value gaps. No. Over my back testing and over what I've seen over time, no fair value gaps. Don't use them at all. Okay. When it comes to trailing, don't count that as an array to, hedge at. Don't do that. Understood? Understood. Now, let's go back to price action. As we can see, we got our trailing stop right there. We're going to wait for price to keep displacing or form another displacement leg. And it might be forming another displacement leg right now because it's coming back down on the 1 minute. We're focusing on this chart right here, this one in the middle, okay? Because we're applying all our techniques on the 1 minute. Understood? Understood. So simply, we're just waiting for price to form the next displacement swing. Once it goes past that previous displacement leg there and actually start printing deeper prices. Let me pause this. That's what I mean when I say, let me go back to the notes. That's what I mean when I say when the latest displacing leg begins printing deeper prices. Okay, when I say printing deeper prices, I mean going past the previous leg, which is right here, going past it and displacing past it. That's what I mean. So if you needed any clarification on that, you got your clarification. I had a little burp right there, so that's my bad. We're playing it again. Here we go. Looking for displacement past that high. Up, and there's a displacement. We're going to wait a little longer to see if it actually keeps displacing past it, because you never know, it can just come back down and retrace on us, so we don't want that. We want to confirm that it's actually, see, it's not displacing yet, coming back down. So we want to wait for it to actually displace through this swing so we can hedge. And actually, wait, did I even set our take profit? Oh no. I might not have set our take profit. Hold on. Uh-oh, we might be cooked. Okay. Thankfully I remembered. Whew, okay. Oh my goodness. Okay, I remembered. Here we go. Right there. That's the, what's that, a sell stop or sell order?
Order working.
Oh wow, it basically hit it. That's crazy. Right? Yeah, it did hit it. Hold on. I'll set it right about there. All right, so there's either two things. We either hit take profit or we hit trailing. Simple as that, right? So since we got our take profit, I almost forgot to set take profits. That would have been horrible. That would have been so bad. Okay. I mean, even if we forgot, you still would have got stopped out and trailing. So you would have been perfectly fine. Anyway, we have this next displacement leg coming up here. If it displaces through this swing, in which we're going to get order filled, you're going to hear the sound.
Order filled.
Beautiful. Okay. Now we're going to keep trailing this as if we're still in that trade. Okay. In which we're going to wait for it to displace past this. Come on, give it to us. Give it to us. Come on. Up a little more. Little more. Little more. Come on. Come on. There we go. There we go. That's what I'm looking for. So in this next displacement swing right here, we want to find the earliest or strongest, hear me out, strongest array that's here, in which the strongest array is this mitigation block right here. See that? That's the candle, the mitigation block. Then we have the violation point, the deeper point of the violation being created. And we're going to drag it right there. And I'm not even going to adjust it no more. I'm not going to adjust it because our targets have been hit. And this is the last point of trailing that we're going to do. Okay. Just to speed this up, just to speed this up. But of course, if you keep holding this, then of course you want to keep trailing it with us. Of course, you want to just keep trailing it. But since we're out of our trade and we just want to speed this up to see if the trailing stop actually works properly, we're just going to keep it right there. All right. And you know what? Enough of me yapping. I'm going to speed this up and see if our trailing stop gets hit, and we're going to see what happens if price actually reverses after our trailing stop gets hit. Because the way I came up with these techniques is what they should do. What they should do is get you out at a point of reversal, not a point of continuation. They should get you out at a point of reversal. Understood? Understood. Okay, understood. Now, if you want to see that point on TradingView, which is 29612, I'll show it to you on TradingView. Hold on. Where is June 8th? June 8th. Oh, here it is right here. June 8th. Let's go back. June. Where is this? Where is it at? June 8th. Here it is. What was that again? That was 29612. 29612. If you want to see this in hindsight before it actually does it, 29612 is right here, about right there. And as you can see, what does it do when it hits our trailing? What does it do? It hits it and reverses. See that? I didn't even know this happened, actually. I didn't even know. I didn't even, I swear to God, I put this on my mother. I'm doing this right in front of you. This is not scripted, not planned. This is the power of trailing stops. And when you actually learn from a person that knows how to do them correctly. So, as you can see, hit trailing and reversed. Beautiful. Beautiful, isn't it? Now let's see it actually happen in price action. Ready? Let's see where it tops out at. It tops out at about 29,738. So we're going to speed this up and actually see how price reverses when it hits our trailing stop. Okay. We're approaching our trailing stop, in which
Stop
of course is
filled.
going to put us in a sell position because I'm not in a trade, obviously. But there's trailing stop. Okay, let me go ahead and close this.
Order filled.
And as you can see from this point, if we go back to TradingView, it should completely reverse because that's our trailing stop right there, that line right there. Let me turn off kill zones. It completely reversed. Okay, that's what these trailing stops are supposed to do. They're supposed to get you out on reversal so you can get majority of the move, at least 80 to 75% of it. That's what these trailing stops are supposed to do. Understood? Understood. Okay. Now, I think I could do one more of the technique 1 days, or because I don't have a lot of time left, I got about, what's the time? I got about at like 45 minutes to record. So this is pretty simple. I'm not gonna lie. I don't think I have to go over this. This is like very, very simple. Oh, sorry, I had the burp. But I might be ending this video in like the next 30 minutes. Okay, so you're getting close to the end. Don't worry. And holy, I've been talking so much and I'm burping. That's gonna get cut out. Don't worry. That will be getting cut out. Hopefully, let's hope the editing JJ actually does cut it out. Anyway, technique 3. I said three. Technique 3 is pretty simple. Aggressive, high magnitude delivery with no retracements in any shape or form. Like price. Remember, this is according to the 1 minute. Remember, all techniques will be applied in the 1 minute. So you're looking at this price action from a 1 minute standpoint. So if you see aggressive, high magnitude delivery with no retracements, like basically saying it's aggressively delivering fast and a large amount of points very quickly. That's all aggressive and high magnitude means, with no retracements in any shape or form. Okay. Trail your stop at the second candle of the most recent fair value gap formation while price aggressively delivers, or or you can set it or well nah well I guess that's basically an inversion fair value gap because I was looking to trying to word it in a way to say trail your stop at the latest inversion fair value gap, but that wouldn't make any sense because you need to wait for price to actually inverse it first. So basically, whenever you see aggressive high magnitude delivery, like aggressive and just fast and quick and no retracements at all, trail your stop at the second candle of the most recent fair value gap formation. Simple, right? If you watch any of my fair value gap um videos, you would understand exactly what I'm talking about. Or I can just show you a little example real quick. So for example, if you're entering off of a bearish fair value gap, which is one candle, two candle, three candle, you would set your stop at the top of the second candle right there. Simple. That's literally it. And it's just flipped around with a bullish fair value gap. It's super simple. Now, when it comes to trailing stop technique 2, tenacious delivery with minimal and stubby retracement conditions. As price delivers aggressively with minimal stubby retracements, or even as singular opposing candles, continuously find the latest strongest array that forms as price is delivering. Okay. So that those conditions actually changed earlier. Like when we were on this here, you see how price is still going up, like it turned into tenacious delivery. When I say tenacious, I mean it's still obviously wanting to go higher. Okay, like it's still having that movement higher, but it's just offering very, very stubby retracements. So we could have actually trailed even further, but I was just focusing on technique 1. Okay, so that's another thing I forgot to say. The conditions throughout the delivery can shift. Remember that they can shift. So we were in trailing stop technique 1, which is moderate retracement delivery conditions. That was these conditions first right here. That was this right here. All that was technique 1. Technique 2 was right here. When we started still going higher with that tenacious delivery, like clearly price doesn't want to go down yet, but it was offering very stubby, small retracements. So you would want to find the strongest array at every one of those retracements. If you want to go back here, as price delivers aggressively with minimal and stubby retracements, or even as singular opposing candles, meaning opposing the current delivery direction. So if price is going higher, basically even as singular bearish candles could be still used as a point to adjust your stop at. Okay, so that's what I mean by stubby retracements. Okay, continuously find the latest strongest array that forms as price is delivering, which is super super simple. So as you can see here, let me maximize it. You can see that it shifts to tenacious delivery here. We have an order block right there, so you can drag your if you see price continue delivering after that, like and it's just still offering that delivery higher, you can set your order block right there. If you see it actually keep going, and then right here, as you can see, offers that bearish candle with the mitigation block, keeps going higher. And as you can see, this is where the displacement really stops. This is like where the tenacious delivery actually stops and it doesn't go anywhere. So your last point of trailing would be right there at that mitigation block because that's the strongest array that formed in recent price action while it was offering that tenacious delivery. So really, your final trailing stop would be right there at 29,677. Oh, 67. If you want to see where that is, we'll drag that up to 29,677, which is right there. So you would get stopped out right around there and you would catch, let's see how much you would catch. Ready? Hold on, let's see how much of this move you would have caught because our entry was about right here. Hold on, let me get it up, route right there to right here. You would have caught roughly 80% of the move. So that's what I'm aiming for when it comes to these trailing stops. I'm aiming for about 70 to 80% of the move. I want you to catch about that or allow price to let you catch that when it comes to these trailing stops, okay? I basically just explained that. That's nothing too hard. And this isn't anything too hard too. It's just when price is just aggressively like just going and going and going with no retracements and is displacing extremely fast with a high amount of points. Just show your stop at the second candle of the most recent fair value gap formation while price aggressively delivers, okay? We're gonna do one more day of the technique one because that's probably the most advanced. What is it? The most advanced technique by far in out of the all three techniques. So let me delete this and delete that if I can delete it. Trading view, thank you. Then we're gonna go to June 4th. So let's reset this. And first of all, before I actually do that, let me go to June 4th to see when it actually started displacing. Or actually, running lower. June 4th. Here we go. Here we go. Right about. So I'll say about 10:03 or 10:06, whatever you want to say. Yeah, I'll say 10:06. So 10:06, 10, yep, 10:06. Bam. Oh, wait, hold on. I gotta make sure that's right. This is the 4th, right? Yep, the 4th of June. 4th of June right there. Bam. Start replay. And we let it load, then we maximize. All right. Holy, I've been recording for an hour and 51 minutes. Boy, I hope this is insightful for you. Oh, no, I did not mean to. Oh, God. I didn't mean to do that. Now everything looks insane. Okay, hold on. I did not mean to do that. Uh, there we go. There we go. JJTrades. Not with all that crappy retail BS that just went on my screen. None of that. Okay, here we go. We're still going to be hedging. We're still going to be getting those close proximity stop losses. You already know. You already know. We don't do break evens around here. That's gay. That's super gay. Super, super gay. We don't do that. All right, now let's wait for an entry, obviously. We bottomed out here. We had a order block which got touched in the form of an immediate rebalance. We could have entered off of that, actually. I just totally missed it. It's moving extremely fast. Jesus Christ. We got that mitigation block. It is respecting it. If it displaces away from it, I'll enter longs. We have also a 1 minute immediate rebalance. I'm looking for that displacement higher. Hold on. Oh, there's the
Order
displacement.
filled.
Now I'm in. For some reason, automatic trading is on, so we're going to turn that off. And we are currently in our long right now. I'm pretty sure we don't get stopped out here. Yeah, I don't think we get stopped out here at all. Let me look. Yeah, no, we don't get stopped out here. It just keeps going. So, like I said, you want to look for that point at which, okay, Jesus Christ. Okay, oh my God. It just keeps going. Oh, okay, okay, okay. Let me pause you. Hold on. God, doubt. Jesus Christ. All right, now let's actually find a draw on liquidity that we want. So I would say for a draw on liquidity like this, let me go to the 15-minute. This looks pretty wonky. We could either target this high and then maybe that mitigation block that's inside of that hourly order block. So we could target the breakage of that, which is 34.24. And let me see if that actually got hit. I'm just saying that because this is according to what I'm seeing in price and what actually makes sense. So if it makes sense, it should get hit. I'm probably gonna look super stupid right now. Here we go. Oh, it actually does get hit. Wow. Oh wow, it goes all the way up there. Jesus Christ. Okay, I was just looking for a low, not a low, but like a lowest hanging fruit objective. Jesus Christ, but it kept going. Jesus Christ, mate. Let me go back to the 4th here. Where's the 4th? No, that's not the 4th. We're looking for the 4th AM session. No, wait, what the heck? Where is it at? Oh, here it is. Okay, there we go. Okay. Yeah, I'm not really actually looking at price action. So if we really look here, we have what's this? So we have Monday doing absolutely nothing. And then we have Tuesday going up again. Then we have Wednesday creating the high of week. Then we have Thursday coming back up for a midweek retracement. Okay, yes, okay. So yeah, it does make sense to target these highs up here past the fair value gaps that were in here due to the midweek consolidation template right here. You see this? Goes up. Wednesday high of week comes back up, retraces on Thursday. So it would make sense to actually target these highs here. So we're going to target those. Okay. And yeah, we're going to do our trailing stops per usual. So where is that at? That's all the way. Jesus Christ, that's going to take. How long did that take? Because I have about 30 minutes to record. That took hours. Holy Jesus. Okay, so what I'm going to do is let this play out right now. I'm going to get our hedgings in. I'm not going to talk too much, and I'm going to speed this up, and I'm going to just let this play in the background. All right. So we're going to set our. Well, once I get all my hedgings in, I'll get all the way up there. So 50 percentile is about right above that high, so about 380. So we're going to look for our hedgings now. And price is already pretty far away from our entry, so I don't think I'll add another one of 4. Actually, no, we can actually, since it's pretty far, we can add another one of 4 because it won't really drag our average pricing up that much. If it starts displacing through this swing here, I'll add another one of 4. So if you want to add another one of your initial entry lot or initial entry amount, it can be decently far. If you want to do that, it price just has to be either decently far or
Order filled.
what was I about to say? Either decently far or in very, very close proximity to your initial entry, in which look at that, our initial entry is now right at that 1 minute rejection block, or basically below this time distortion, which is kind of sort of a good thing. So we got one there. We're gonna wait to hedge the rest of them. Actually, I'm just gonna speed this up. You don't have to listen to me yet, but I'm gonna get our hedgings in. And yeah. All right, people. After a long time of waiting, we're finally approaching take profit. Obviously, I'll be writing down the reason I hedged, the reason I drag my trailing stop to certain places and stuff like that in the editing. The editing part of JJ would do that. The post recording JJ would do that. But we're approaching take profit for about almost 7 grand, which is an amazing amount of profit for 150K. I mean, if there was no consistency rule, you would have passed your account in well, no, definitely not pass your account in one day because I think 150K is like 9,000 profit target, I think. So you probably would have made about like 70% of it. But we're approaching the end of basically the entirety of risk management. This will likely be my only risk management video ever. Clearly, because I've been recording for 2 hours and 47 minutes, a very, very long recording. But I'm sure you got a lot of insight out of this. We're just gonna wait for this to hit take profit, and yeah, we'll end the video there. But we just got to keep waiting. But other than that, I'll keep it on regular speed for now. If you want, you can speed it up. But I'm sure it's about to hit take profit in just a minute. So I'm gonna go back to fixing my food. I was just stirring this up here in this bowl here so I can prep. But other than that, it should be hitting take profit really, really, really soon. Well, never mind. Now we're back at what are we from peak profit? We're down 40 points. So, but it's about to hit. I'm not too worried. But you learned a lot, honestly. This is probably gonna be one of my rawest recordings, meaning like editing certain things out, because I don't feel like going through 2 hours. Well, basically 3 hours of recording. I don't feel like doing it. So this is definitely probably gonna be one of the most raw recordings you see. You might just see the intro, you might see the fade in and fade out transitionings, and that's really it. But you learned a lot. You learned about close proximity stop losses. You learned about all three mechanisms of trailing stops. Of course, I'll be making a compendium entry in the Discord for this. Actually, let me go in the Discord just to show you, in which we're about to hear order filled. Let's go ahead and hear it. Come on, Price. Give us the order filled. Order filled. That sound effect. Such a nice sound effect. Stop filled is nice to hear too. Because majority of the time, whenever you hear stop filled, it's either a trailing stop, because you're making money, or stop loss. You're losing money. But order filled is always nice to hear. Up, here we go. Come on. Almost. Come on. It might give us 6,700.
Order
Oh no,
filled.
just 6,600. Oh, we're still in longs? What? Wait, why did it only take us out for like wait, hold on. That's kind of weird. I'm gonna let it hit the rest of it though. I don't know why it only took out a couple. Wait, did I only put in 7 up there? Oh, I think I know why. I don't think it filled the rest of the orders. Wait, I think it only filled 7 of them. Yeah, it only gave us like a couple fills. That makes sense. Okay, okay, yeah. Wow. Okay. Where's the fill price at? Yeah, so it didn't give us all of our fills, so we're gonna let it give us the rest of our fills, and then we'll be done with this. And then I'll show you the performance center and all that, how long it took. I'll show you that after it hits this next fill. Come on, it's right there. That's hilarious. It is right there, dude. I gotta keep, dude. I'm like recording. I'm like recording while adjusting trailing
Order
stops.
filled.
Oh, there's the order filled. How beautiful is that? As you can see, trailing stop never got hit. We hit full take profit. That was just our little savior, just in case price retraced on us. But we can go ahead and cancel these. Oh, if I can cancel it. And this lecture, really, I would consider this is really a lecture about risk management. And holy crap, it keeps displacing through it. But anyway, amazing lecture for me. I'm kind of proud of myself for even recording for this long. You learned a lot. You learned about hedging, trailing stops, and close proximity stop losses. I will be making a compendium entry in the Discord. Okay, so you don't have to watch 2 hours or 3 hours of recordings again. Uh, I really don't know what to say because I'm really fatigued from recording for 3 hours. But I guess is the end of risk management. Okay, if you want a little screenshot of everything here, here you go. This is everything right here. Everything's right there. So that entire area you can screenshot, or I can just do it like this and you can screenshot it. Hold on, let me do this and do that. There it is for you. So get your screenshots in. And this is the end of risk management. Really, I don't know what I'm going to title this video, but this is the end of trailing stops, hedging, close proximity stop losses, and basically everything when it comes to risk management. Remember, do not use break evens, okay? This is the whole point of this video. That was the main objective of this video, for you to not use, here, listen to me, for you to not use break evens, all right? Hope you have a good time, good day, good night, whenever you're watching this. And this is the end of risk management. Good luck and good trading.